Hey, good morning, everyone. Welcome to the Macro Snapshot. We are the morning of Tuesday, January the 27th, 2026. Not a huge amount going on overnight, so we'll just go through some of the main markets here. So let's just start off with some of the precious metals. Here we have the gold chart. This is the spot. Now, yesterday we had a little bit of a sell-off. Obviously, the Fibonacci sort of extensions are a little bit overbought. RSI, stochastics, MACDs, all of this stuff is sort of overbought. So from a sort of momentum perspective, this it's interesting that it's still going. But what is definitely showing us on the chart is that zero technical damage was done to the chart after yesterday's sell-off, and we have a strong buyback. Now, can it go to new all-time highs? Let's see. But as you can see here, the moving averages, the 20, 50, 100, and 200 EMAs are still all pointing skyward. So that's looking strong. There's still very strong retail demand coming out of places like China, India, Brazil, Turkey. These kind of Iran, these kind of countries, a lot of retail demand for gold, and the macro backdrop is not particularly different. There is still geopolitical risks in the world. There is still sort of a weakening of the US dollar. There are still questions about the independence of the Fed in the US, and also there are still questions about global fiscal responsibility. Most countries around the world are still pumping in a lot of stimulus, and there's definitely a sort of reflation sort of vibe happening around the world. And we're seeing that with the strength in emerging markets. We're seeing that in commodity currencies, and we're seeing that in the commodity space in general, maybe with the exception of agriculture. So the point is here is that the gold still seems to be a buy on dip kind of situation. So really what you need to be doing if you want to be shorting is getting excellent sort of price entries and structuring those trades correctly, understanding that implied volatility is very expensive. So you probably want to be either having perfect timing and getting a little bit lucky, or you need to be buying sort of, let's say, put spreads. On the long side, it's just a question of sort of, getting some nice Fibonacci retracements or levels. Did yesterday represent a decent buying opportunity? For me, I'm not buying up here. You want to see something much more substantial, maybe back below sort of, $5,000. Now, silver, similar kind of situation, a much more aggressive pullback yesterday. You see silver had obviously very, very overextended, similar situation to gold, but in a more extreme way. And you see here that it popped almost to the 1.382 Fibonacci sort of measured move extension, which is very overstretched. And obviously on the RSI, we're sort of, I think, up in the 80s, and I think on the monthlies, we're even up into the 90s. So the point is that that pullback was due. But what is interesting, of course, is actually the reaction. And again, you see a big green candle here, a strong pullback. Again, same as gold. You see all the moving averages, all very sort of positive. So technically, this is quite healthy. And what is interesting to me about silver is that we are getting pullbacks. You go all the way back to October of 25. You see a nice little pullback. Then you see another pullback here in November. And then even here, we saw a consolidation at the end of last year, and then a mini consolidation at the beginning of this year. Same thing at the middle of January. And then yesterday, you could argue that it was a blow off top. So what I'm trying to say is that silver, one could argue that it sort of looks parabolic, but there are along the way sort of consolidations and sharp pullbacks. So in a certain sense, one could argue that some of the froth, is coming out of the market at a regular basis, and one could argue that the balloon is being pricked in now as being pricked enough. We shall see. A couple of things just to sort of keep in mind here, just in terms of silver, and is this sort of getting towards the top? I mean, it certainly feels like it, but I just here I've got the silver premium, which is being paid in Shanghai, and you can see here that per ounce, it's there's a big sort of tax on it, a value added tax. But once we strip that out, you can still see that there's still a big premium being paid for silver in the Shanghai markets compared to London and New York. Now, is that indicating a lot of, sort of retail demand? It's possible. But just keep in mind that, a lot of this is coming out of Chinese demand. The other thing as well we should keep an eye on is the fact that the Chinese Lunar New Year is happening, I believe, I think about the 12th or 13th of February. So in like 10 or 12 trading days. And the markets over in China, also for the precious metals, will be closed for a week. And there's some kind of talk going around and some kind of feeling that a lot of retail, maybe even institutions will kind of, sort of take profits, cut back their buying. Because remember that for the Chinese Lunar New Year, it is historically sort of typical to buy sort of gold and silver jewelry as a gift. So who knows? Maybe some of this is retail demand. Maybe there could be some money being taken off the table as the markets close for the Chinese Lunar New Year, and so that also be a factor, sort of starting to take some of the froth out of silver. So the point is here, buying silver at this point, it seems to be a very low risk reward kind of proposition. The other issue as well is that, just going back to the chart, is that if we look at high prices in commodities, typically in commodities and the metals, high prices are a cure for higher prices. If because at these sort of price levels, you're going to have a reduction of industrial demand. It just becomes too expensive. Now we all know that industrial demand is 55 or 60% of the silver market. But the point is, at these prices, end users will start to sort of pull back or look for alternatives. And maybe we will start to get a little bit more supply, not necessarily from mining, but we could get it from the release of stored silver and maybe increased flows of scrap silver. Point is that everyone has, sort of silver cutlery from their grandparents. And I'm starting to read a lot of reports of people sort of, literally getting out their silverware, their old candelabras and, sort of candlestick holders and cutlery and whatnot, carving knives, and taking it down to the local dealer. I was reading something yesterday. Someone went down, they got $200, So the point is that there is a ginormous amount globally of sort of unused and stored silver. And these sort of attention-grabbing prices will incrementally start to bring some of that sort of stored supply back into the market. Point being that we're sort of, if you want to use a baseball analogy, we're in the sort of the seventh or eighth innings at the moment, if not the ninth innings. So it's going to be very interesting to see if this recent pop, in the last 24 hours, if we can't make new highs here, I think that is going to be maybe the signal here that we could get a more significant pullback, maybe down to 90,000 or even back down into the 70s, down to this zone here. So it's going to be an interesting one to look out for. Obviously, having a very quick look, platinum here and palladium, similar kind of price action, sort of still very strong, still above all the moving averages. But, you've got to think that this is reaching into speculative territory. What is maybe more interesting in a sense is what's happening with copper. And I pointed out yesterday that copper was doing nothing wrong. It was bought on this Fibonacci dip, around a few days ago, the 21st, 22nd of January. But what is interesting here is that it kind of failed to push to new all-time or to new highs up here, up at 6.15, but also it failed really to get out significantly above this Fibonacci box here. So a little bit of a failure here. Let's see what happens here. This is going to be a very interesting price action here, because if we put this on a 4-hour chart, what I want to show you is what the bulls need to do here. If the bulls are serious, it's not necessarily terminal. So let's have a look here and see what happens. Basically, for the copper traders, I'd be looking really around about these levels here. So this is the 4-hour chart. And we can see here that copper kind of had a bit of a breakout. It failed at this local high here at 6.02. Let's call it about $6. So really what has to happen here is that the bulls, you see, were back down into the Fibonacci retracement zone. The bulls really need to pick this up. If this gets below, I would say, I mean, this 50% is a bit, interesting, 5.85. But really, if it gets below the 5.82, that is a problem. And you'd have to say this is a failed retracement here. And basically, sorry, a failed bounce. And this retracement now looks like a bit of a failure here. So that's really the critical level for me, is going to be around this sort of 5.82, 5.80. If we get below there, I would tentatively suggest that is telling us that sort of the feeling about copper and maybe sort of global demand is cooling off. As I said yesterday, I think the big picture is very bullish, but you can't trade the big picture on a sort of a daily basis here. So maybe that's copper just cooling off a little bit. Of course, if this holds, as I say, on the 4-hour chart, this little fib retracement holds, this could just be a moment for another little sort of bounce, and we could even get something on a very short term sort of, look at that. We could have a little bounce just up to retest those highs. So let's keep an eye out on that. Other thing, just while we're over here looking at some of these sort of instruments, is BTC. Let's look at Bitcoin. Again, I don't have any sort of philosophical views on Bitcoin. But what I will note is that the price action in from a technical perspective is heavy here. You can see here that we're still trading around these very key levels, around about $86,500. We haven't any bounce has failed. I mean, look at this. Bounce has failed, and even yesterday we had a mini bounce and failed. And at this point, if you look at the moving averages, even the 20 moving averages found it difficult to sort of flop above the 50-day moving average, and now it's trading below. So all of those moving averages are not looking particularly exciting or optimistic, and they are starting to point southwards. So BTC here is trading heavy. I'm not going to say it's going to collapse, but as I say, if it does get through these levels, which I pointed out yesterday, about the 86,000, 85, 84, 86,000 levels, the Fibonacci measured move is to at least retest these lows down at 80,000, maybe even a little bit more below. Let's keep an eye on that. Talking about interesting markets and markets which have been sort of bubbling, let's have a quick look at Nat gas. We all know that there's freezing weather across the continental North of America, the North America. We did see a bit of a pullback yesterday. Now we're still getting cold weather, and keep in mind that when we have cold weather in Nat gas, the production slows a little bit. The pipes start freezing. It's difficult to sort of push that gas through all the pipes. So there's actually been a significant reduction in production. But we're starting to see in the front contract, which, by the way, expires tomorrow. So the front contract here, we have seen a pullback. But I just want you to look at the structure here of the term structure, because if we look at NG1, you can see, okay, it's popped on this sort of weather story. But as soon as we go to Nat gas 2, so the second contract, which will roll over and become the first contract, you can see the price action, has been bullish, but not nearly as bullish as the front contract. So the point is here is that the curve, if we look at NG1 minus NG2, let's look at the curve. So you can see the front contract, definitely ripped into a backwardated state, but it's starting to pull back a little bit. So the point here is that nat gas is it's starting to sort of come down a little bit, and as we roll into this next contract, which you can see here, that it actually didn't sort of pop to new local highs, and it's starting to roll over a little bit. Now, if we go over across in Europe, let's look at the European benchmark, still trading strongly, the TTF, so no problems there. So nat gas is still strong, but it's going to be interesting to start looking at the weather forecast, because once we get this little wave of weather, if that starts to sort of become more normal, and we start starts to going out of the headlines, we could get a pretty aggressive pullback. And so it could be interesting to play some of the ETFs in nat gas, UNL, UNG from memory. Even the 12-month ones could be kind of interesting to look at nat gas. Okay, so looking at some other markets now. Just have a quick look at equity volatility. Looking at volatility, volatility is generally supportive for the equity market. You can see here the VIX trading around about 16. That's implying about a 1% move on the day. So that's quite supportive. If we also look at the bond volatility, so let's look at the MOVE index. That's at very low levels. So again, as we know, equities do enjoy bond volatility, which low. So this is a positive. If we look at the only thing where obviously volatility is very high. If you look at, let's say, gold, you can see that gold vol is very, very high, making it very expensive to be long gamma. If we look at silver volatility, it's come down a little bit with that sell-off yesterday, but it's still very, very high. So you can see that silver vol is very, very expensive. So the point is that if volatility is high, then, vol targeting funds, CTAs, momentum funds, trend followers, and just generally institutions, all of them have volatility adjusted risk parameters, volatility adjusted risk parameters. So things like sort of gold and silver, especially silver, palladium, platinum, these things are, even if the markets are going up, these funds reduce their sizing just mechanically and automatically to maintain their volatility adjusted risk management system. So that all of this kind of stuff is going to be taking steam out of things like silver. Whereas if we have low vol, of course, it's the opposite, the contrary, and that's going to be a positive tailwind for equities. Now, talking about equities, pretty positive. Just in terms of the earnings, we do have some interesting earnings today. Obviously, we have the big tech behemoths, as people like to say, tomorrow and on Thursday. But nonetheless, quite interesting today, especially this morning. We have United Health, just to get a sense of that whole space. Boeing is going to be interesting. RTX, Raytheon, which is the big armaments, and so it's going to be interesting. Boeing and RTX in terms of the aerospace, but also the whole sort of military thing. Trump's talking about an extra 500 billion in military spending. So it'd be interesting to see their guidance. So there's all kinds of interest. And Northrop Grumman is also in that military space and armaments. So that's going to be interesting. UPS, just in terms of logistics, what's the general sense of the economy? General Motors for cars, the consumer. and American Airlines for sort of consumer demand. So plenty of interesting stuff coming up right now this morning, just to see where the sort of military industrial complex is at, and also maybe just the general sort of economy in terms of GM and American Airlines in terms of demand from the consumer. Okay, but just if we look at the technical perspective here, pretty strong day yesterday. If we look at the ES, it's coming up to a fairly critical level, sort of local highs coming up here at around about 7,000. But this is bullish price action. It was bought, and now, it's pushing higher. So there's nothing negative to say at all. Look at the moving averages, they're all positive. If we look at the NASDAQ, up today. Again, there is a bit of overhead resistance at 26,000, but this is very, very positive. Russell, again, there's obviously been a bit of, we talked about that rotation going from large caps into small caps, going from sort of momentum and growth into value, going from, let's say, the general sort of tech sector into more like semiconductors and smaller caps. That all seems to be unraveling. But I would say unraveling, just sort of, they're slightly sort of re-rotating. And that could be just in the lead up into earnings, which we're having tomorrow and Thursday, as I said, for like Tesla, Microsoft, all the big earnings tomorrow. So let's just keep a look at all these sort of relationships and ratios. What we're seeing here is the Mag 7, the Mags had a pretty nice comeback over the last few days. But again, just stalling out at this fib level here. You see this fib sort of bounce level, the 61% at about $66. So that's going to be interesting. And again, it's probably going to be honest, depend on earnings. If the earnings are generally positive for the Mag 7s, I do believe this will pop and will probably sort of start pushing up towards 68, $69. So that's an interesting one. If we look at the equal weight RSP, again, opposite kind of story. A bit laggy, my computer this morning. Still doing pretty well, but just having a little, sort of softness on a relative basis, but still doing well. What is interesting is really like a global equity continues to rip high. If we look at Europe, the stocks 600 over in Europe. I mean, what to say? Look at the chart. It's getting towards the top of the channel. All the moving averages are positive. Looks as though it wants to test all new highs. If we look over the Nikkei, doing very well. There was a bit of we obviously had a bit of issues with the Japanese yen. The Nikkei doing very well. The Topix doing very well. And look at Brazil. The Bovespa is just ripping high. And again, it's all part of this story of, a certain amount of funds going out of the US and being reinvested into emerging markets and sort of European markets, Japanese markets, Australian markets, commodities. There's definitely some kind of rotation has been happening for quite a long time. And the fact that the US dollar remains very, very heavy is also as a benefit. And if you look at, for example, bonds issued in local currencies, that's also doing very well. Emerging market bonds issued in US dollar is doing very well. So the point is there is quite a lot of risk on. And you just look at things like the Bovespa here. Let's have a look at India. Well, that is not doing well. Wow, something's happening in India. So my whole story there, India is the outlier because it's the only one not doing well. So that is quite interesting there. But again, India is not a commodity story. India is not a commodity story, as I say. So again, maybe the better nuance is to say that maybe it's more of a commodity story. So that's interesting because the Sensex, if we actually go back, let's just have a look here because the Sensex has actually had a pretty good run. It is very volatile. So, it doesn't look as scary if you sort of zoom out a little bit. Hey, if you want to get some perspective, zoom out a little bit. So maybe this is a buying opportunity, but I don't know a huge amount about the internals of this over the last couple of weeks. So I'll shut up at this point about India. But that's interesting because, overall, it's been a pretty strong market. If we go back, let's say, a couple of years here, you can see that is a strong market. Maybe a little bit of profit take. Who knows? Maybe around about 80,000. The Indian ETF could be an interesting one. So that's something interesting to look out for. But what I can say is just overall, if we look at China is doing pretty well. If we look at the 50 is doing quite well. And if we look at the EEM, which is the emerging market in general, so that's the point. Look at EEM, which is emerging markets in general, all-time highs, new highs, pre-market going higher. If we look at emerging markets, excluding China, doing super well. So it's just India seems to be a bit of an outlier. And just talking about some of these markets, if we look at the Korean Kospi, which is just completely is basically doubled in the last year or so, and obviously this is highly correlated to the semiconductors and the semiconductor index, which is going very well as well. We saw yesterday Trump, interesting reaction here. Trump yesterday, said that tariffs on Korea would go from 15% to 25% because the Korean legislative the parliament basically hadn't ratified that sort of deal. And Trump understands nothing. In Korea, it takes a long time to get laws passed. So the Koreans are saying, hey, we're still going through the process of ratifying that trade deal. Anyway, Trump said, oh, we're going to slap an extra 10% tariffs. Excuse me. But it is interesting just to see the reaction here. The taco trade, happening in Korea as well. The market over in Korea basically had, 24 hours of sort of hesitation and pausing and said, F you, Trump, and decided to rip higher. So definitely the taco trade is the default thing now. And Trump, those tariff headlines are really having much less impact. So that's it for sort of the equities. What else? Yeah, just very quickly on the FX, sorry, going a bit longer here. Dollar trading still very, very heavy here. If you look at the dollar index, which again is not the totality of the story, because we know that the dollar index is a historical artifact, which I was saying yesterday is not as broad as, let's say, the Bloomberg index, which shows emerging market currencies, which are doing very well in China and whatnot. But nonetheless, the dollar index is trading heavy. So we gapped down and it's failed to really retest this gap. Which we had on over the weekend, had a little bit of a bounce yesterday, attempted, but trading heavy today. And you've got to say that the path of least resistance is probably down to 96.33. Now, will it hold there? And could we get a bit of a reactive bounce? Probably. But overall, the dollar's trading heavy. You see against the euro. Euro looks as like it's testing these highs and wants to push higher. By the way, talking about the euro, we do have Lagarde speaking today at midday and Nagel, so a couple of European heavyweights speaking. But just generally, the dollar trading heavy. You can see the Japanese yen is actually, is continuing this move downwards. It's broken now. It's down at the 50% fib retracement levels, broken through the 100-day EMA. It's got this sort of downtrend, which is a bit of a key line. So as I was saying yesterday, but it did bounce from where I thought it would bounce yesterday, but now the US dollar is resuming its weakening. So US dollar weak, and I just want to look also at the Aussie here. Aussie dollar at a pretty key level. And the reason I'm mentioning the Aussie dollar is that it's been one of the more preferred trades for the last, basically 6 months or so, at a pretty key overhead resistance here. You can see here also a Fibonacci extension. It's getting to that Fibonacci move. But the price action is very, very strong. And the data is strong, and we're going to get another read on the data. So it had a little bit of a pause and a hesitation at this overhead resistance, but it's basically ripping higher. And what's going to be very, very interesting is tonight at 7:30 our time, we do get the quarterly, so not the monthly. More important, we get the quarterly CPI readings at, as I say, 7:30 today. And if they're strong and the CPI is a little sticky and is not coming down, that could feed into the idea that the RBA may actually sort of hike at some point. It's already semi-priced in for the RBA, and so if the CPI, as I say, definitely keep an eye on that, because if that's the case that it's strong, that could be the catalyst for the Aussie dollar to push higher. And then if you start looking at this, we have to start scrolling back and zooming out here a little bit. You can see where we're at. There's quite a lot of blue sky and empty space above, and we could actually be in for a pretty significant further rally in the Aussie. And that's not to say it might not pull back, but if we do get a strong CPI, let's keep an eye on, for example, the 2-year yields, things like that. If they start going up, the market will start pricing in, definitively a hike for the RBA, and we could start to see the Aussie push up towards the 70 cents level, which is going to be interesting. Other interesting thing in terms of the currencies, getting back to the yen here, Japanese yen. We do have a 40-year bond auction this evening in Japan at 22:35, so 10:35 Eastern time. Now, why is that interesting? Because if that is strong, that auction, that is going to take away the pressure. It's like, oh, the BOJ is coming in to buy. Let's not stress out about Japanese bonds. Let's all relax. And that could actually weaken the yen a little bit. On the other hand, if we get a weak auction with poor liquidity, poor demand, that could sort of feed into this narrative of sort of problems in Japan. So it's going to be an interesting one to look out for, not only for the yen, but also bond yields in general. If we get a weak auction, of course, that could push up the yields on the long end, which could sort of seep into some of the other developed market bond markets, developed market bond markets. Right. Okay, guys, I've spoken for more than enough. Have a great day. We have ADP at 8:15, the weekly number, probably not massively market moving. But again, the general sort of sense here is that the US economy is still doing pretty well. Trump, geopolitics, all of this stuff, sure, it's all happening. But at the end of the day, they have strong companies making a lot of money, and the economy employment situation seems to be relatively strong. So that's one reason why the dollar, if it does get down to that level, the dollar could stabilize a little bit if it reaches that resistance. That's something to be looking out for as well. Okay, that's it. Have a great day, and I'll be back tomorrow with the macro snapshot. Thanks very much.